Okay, I propose we get started. Good morning, everyone. Welcome to our webinar on CSRD, from carbon accounting to full sustainability reporting. I'm very happy to have my colleague Stephen with me, but also Charles from Greenemy. Today, we would like to explain you more on CSRD, in particular on the role of carbon accounting and the specifics of carbon accounting in CSRD, and also on data collection for full compliant CSRD reporting. So before diving into the content, let's say as a couple of words on who you have in front of me, of you, sorry. So I'm Kenneth, co-founder and CEO of Carbon+Alt+Delete. I have the easy job today. I will be mainly the facilitator. The hard work is done by Stephen and Charles. Maybe before I give the word to Stephen to introduce himself, one word on Carbon+Alt+Delete for those in the call who don't know us yet. Carbon+Alt+Delete, we're a software provider focused on carbon accounting software. So we have a software package that helps companies calculate their full scope 1, scope 2, scope 3 carbon footprinting, set a target, set up a mitigation plan, and so on. And the way that we work is we sell our software to consultants who then use our software to help their clients managing their carbon footprint. So that's Carbon+Alt+Delete. Steven, can you quickly introduce yourself, please?
Yes. Hi, everyone. I'm Steven. I'm a carbon expert at Carbon+Delete, basically dealing with all methodological and new legal aspects for implementing in our tool. And today I will be guiding you through the fields of the carbon accounting in the CSRD. And looking forward to joining the insight session with Charles.
Charles, you want to go next, introduce yourself, and maybe also say a couple of words on Greenemy, what you guys do.
Yes, sure. So, hey, hello, everyone. I'm Charles, responsible of partnerships at Greenemy. Greenemy, we're a RegTech focused on the European Sustainable Finance Frameworks. So our core product is CSRD, and as such, we have a complementary tool to the one of Carbon+Delete focused on carbon accounting, and we focus on the disclosure management and the production of the CSRD reports. And as head of partnerships, I manage the relationship with fellow tech partners, such as Carbon+Delete, but also with the consultancies. Obviously, we work hand in hand with consultants to help our customers. So I know that there's quite a few here, so also happy to continue the conversation later.
Thank you, Charles. Before diving into the content, maybe some housekeeping rules on the next slide, Steven. So it's a webinar with a big group. We're very happy with that, but that means that we have enforced you to be muted and your camera is switched off, just to keep it manageable. But we invite you to nevertheless interact with us through the chat. So in the same chat where if you put your name, or at least some of you have already introduced themselves, feel free to use that chat to ask questions. We have a Q&A time slot foreseen towards the end, but don't wait until then to put your questions in the chat. We'll try to answer them as we go, if relevant. And we also know from previous webinars that sometimes there is exchange between participants in the webinar, exchanging learnings. So we want to invite you to participate in that. To anticipate the first question, yes, we share recordings, and yes, we will share the slides after this webinar. So you can take notes, but you should not. I saw Daniela might have a problem with the sound, so let me know, Daniela, if that's still the case, and then we'll fix it. But please use the chat to interact with us through the webinar. So what is the agenda for today, and what is the setup? We will not, Stephen, if you can go to the next slide, please. We will not explain you the basics of CSRD, what it is, what the timelines are. We assume that this is known knowledge. If not, please ask us in the chat and we'll quickly put it in the chat. But the goal of today is basically to do really deep dives on two topics and go a bit beyond what you find in a lot of white papers, other webinars. So we will zoom in on really the carbon accounting piece in CSRD, which is of course the bread and butter of what we do at Carbon+Delete. But then I'm also very happy to bring Greenome here on board and let them explain how they manage data collection, which is of course also a big hurdle to overcome when it comes to CSRD reporting. Before going there, allow me to say one word on the role of software and consultancy. And basically, I would like to start with asking you a question through Menti. So either you scan the QR code or you go to menti.com and then use this code. And we have a question for you, mainly if you are a consultant helping companies with their CSRD offering. So the question then to you is, what is your offering that you have today or in the near future on CSRD? Will you do nothing at all? Will you only do the double materiality assessment? Will you do the DMA and then also focusing on everything that has to do with E1, so with climate? Will you do all environmental aspects? So that's the fourth option. Or are you planning or doing full ESRS, full CSRD covering, including all the E's, the S, and the G's, and also including DMA? So I'll give you a couple of seconds to answer. It would be interesting for us to know a bit who's in the call and where you are. If you are an end company, then maybe fill it in like what you have done already today. Nothing, only your DMA, full CSRD reporting, or only the climate piece. So I hope, Steven, that in the meantime, answers are coming in. Can you go one slide back? Well, okay. I think people might need to refresh their page. We were already on the second question, which is good, but we'll get to that in a second. Well, still, let's wait a couple of seconds. We see the answers coming in. Okay, I see still answers coming, but I think the trend is clear. So the majority of you is or will be offering full CSRD, so full ESRS, 10% nothing, and then the remaining 30% split a bit across the other topics. So actually that's good because that's exactly why we brought carbon accounting together with full CSRD reporting from CSRD. If you then go to the next question on the Menti, and then indeed people will see on the app. Now, Steve, you need to go first, I think, to the next question. There we are. So now people can answer this question, which is the second question. Then if you think about software providers, Carbon+Alt+Delete, Greenome, or any other software provider that you can think of, what do you expect from them? Nothing. Basically, you don't need software. You can do it on your own or with Excel-based tooling. Do you believe in dedicated software packages? One that's very good in carbon footprinting, one that's very good in CSRD reporting, maybe another one that's very good in LCA if you would need it for another one. Or are you looking, would you expect to have one solution that can do all? Again, we'll give you a couple of seconds to answer. People maybe already answered this question before having the full context of what they would mean. To be honest, I would have expected that more of you would have answered one solution, because it's always easy to say I want to have one solution that fix all. But actually, I'm happy to see that a lot of you believe in dedicated packages, because that's also our view. So, Steven, if you can go back to the slides. And then indeed go to slide 8. Perfect. Thanks a lot. So what is our current thinking? And the current thinking mainly of Carbon+Alt+Delete, but I understood from Charles that it's a similar view than the ones of Greenome. Specialize the back office, consolidate the front office. So what do we mean with that, right? Reporting companies need, of course, in the end, a compliant CSRD reporting minimum, but then also need to go further beyond that. So if you click once more, Steven, what that means is that in particular medium-sized companies, and we define medium-sized company rather broad, from 10 million turnover up to 1 billion turnover, so the SME and the large enterprise, but not the very large ones. Those companies, they need, at least to a certain extent, support from carbon accountants, people who are specialists in carbon footprinting, because that's typically a rather complex piece of the sustainability reporting, but also from what we call here CSRD accountants. People that are very familiar with all the ESRS, with double materiality assessment and so on. We like the term accountants. In practice, it's more sustainability consultants. That's the term that's currently being used, but we like the term accountant. Why? Carbon accountant, CSRD accounting should be a commodity, and it's a recurring business, a recurring activity that companies need to do every year. So it's very similar to how financial accounting is being done. Consultancy still sounds expensive and one-off. Accountancy is more commodity and recurring, and that is what it should be. So I saw it's good that the first question we asked is that a lot of you want to offer it both together. And that's also what we show here in this slide, right? You can offer it together as a consultant to the clients, but then what we see is that often consultancies internally have dedicated teams, a dedicated CSRD team and a dedicated carbon accounting team. And that's also why on the tooling side, Steven, if you click once more, we believe basically in this picture where you have dedicated carbon accounting software that goes very deep on carbon accounting, and that's being used by carbon accountants, carbon accountancy specialists. And then you have CSRD software that covers the full broad compliance CSRD reporting, and that's being used by CSRD experts. And then, of course, I saw already a comment in the chat from Sarah, of course, those platforms need to talk to each other, right? And we will illustrate that what comes out of Carbon+Alt+Delete, for instance, can easily be imported in Greenomy. Carbon footprint is an output from Carbon+Alt+Delete and input into a platform like Greenomy. So that's basically what we believe. In the backend, it are different things, different specialists. So you need different consultants, you need different software, but of course, towards the end client, it makes sense to group it all in one package to the market. So that's what we see. Of course, happy to hear your feedback. Feel free to agree or disagree in the chat. So that brings us to the two topics of today on the next slide. So when we talk to sustainability consultants, we often hear two questions when it comes to CSRD. The first question, Steven, if you click once more, is on carbon accounting, right? On carbon accounting, we talk greenhouse gas protocol language, we talk ISO 14064 language, we know science-based targets, etc., etc. We sometimes get the question, okay, but how does that compare to what we have in CSRD, more in particular within ESRS E1? So that's the first question where Steven will zoom in. The second question is then, okay, we know carbon footprinting, we know what type of data that we need, but then if you start to look at the full ESRS, the full CSRD reporting, it seems like there's so much more data we need, what data, where to find it, and their software like Greenomy can come in. So there, Charles will zoom in based on their experience and their solution, how they see it and how they would advise companies and consultants to go about it. So these are the two deep dives of today. And with that, Steven, the floor is yours to start with the first deep dive.
Thanks a lot, Kenneth, for that introduction. So indeed, first deep dive, carbon accounting in CSRD. First, to start with, just a very quick introduction where that the climate change and the carbon accounting fits in ESRS. Just as an introduction, ESRS are the European Sustainability Reporting Standards as part of the CSRD. Most of you probably know that already. The key features of that European Sustainability Reporting Standards are that there are 12 topical standards covering the ESG, the environmental, social and governmental aspects. That one of the newest and most debated aspects is the double materiality. No focus point of today, but I just want to raise that it's of course an important one, and we also will see it in the climate change aspect, looking from the environment to my business. and from my business to my environment. And then last, the comparative, not only looking at your current year, which can be mostly in the carbon accounting, but also looking to previous years. Climate change is the topical standard that is the focus of today, and also in general the focus of Carbon+Alt+Delete. And just as a already quick introduction, that double materiality on climate change is then typically translated in a term mitigation, my impact from my company to the climate, and adaptation, the impact of the climate or the climate change to my business. We started, or Carbon+Delete already has started the conversation on CSRD a while ago, and we also did our first release on that one. I won't spend too much time on it, but just to give you a brief insight in the fact that we have a simple download available with all disclosure requirements on E1 in an easy editable docs format, allowing you to go through it to get your first sense in each of these disclosure requirements and to have a quick look at the application requirements in a CSRD, basically telling you how to disclose it. Today, that won't be the focus. Today will be the focus in first tackling carbon accounting in CSRD, and then having a look how this data could be integrated in a CSRD software like the one of Greenerme, as Charles will tell. Another general one on ESRS is that our current thinking, as Kenneth introduced it, about specializing the back office makes for us a lot of sense on climate change in particular, if we look at how climate change is basically asked, is perceived in the ESRS. If you have a look at this overview on the type of data that is demanded for climate change and for the other topical standards and the general disclosures, the total is mainly narrative based or semi-narrative based. But on the other end, for climate change, the majority is numerical, and the majority of these numerical are actually calculated data points with dependencies between these data points. This causes complexity, and that complexity requires specialized software, in our opinion, that is able to handle these calculations. Moreover, and that's for me, I think, a very interesting aspect, is that a lot of activity data, whether it's water usage, whether it's land usage, whether it's waste, that you need for your carbon accounting to make your carbon footprint in your E1 climate change, are data that could also be reused or just be applied to other E's. In particular, the water, the biodiversity, and the resource use are very much usable, or very much possible to reuse your activity data, which could improve your consistency and efficiency when doing your CSRD or ESRS reporting, just as a general introduction. Then I would like to take you in a first level deep dive from the climate change topic to the different disclosures that are actually requested in that E1 on climate change in ESRS. I've tried to build up a logical flow in it. The ESRS did not take a logical flow, but we will provide you today with a logical flow, basically starting with your collection of your activity data. In particular, for climate change, first the energy consumption. That's already one of the disclosure requirements, E15. Start with your activity data, in particular your energy consumption. Based on that activity data, energy, and also the other business activities, you can calculate your carbon footprint, your gross greenhouse gas emissions, and also your greenhouse gas removals, mainly land-based removals. And with that carbon footprint in mind, you can start calculating your climate mitigation strategy. Basically, the interaction between the threefold targets for mitigation that are, of course, very much linked to your actions for mitigation, and that are, of course, also very much linked to your transition risk and opportunities, mainly your transition risk causing policy forces to mainly switch your business activities. Having that strategy calculated, you will be then finally able to set your mitigation plans and policies, whether it's a transition plan, an internal policy, to decide on greenhouse gas offsets with carbon credits or with an internal carbon pricing, for example, for a procurement scheme. These are then the final step, in our opinion, that would make sense to use these quantified, calculated data, whether it's your carbon footprint, your strategy, to make your plan and policy. And basically, the next year, it's again starting from the collection of your activity data and doing it all again. Quite a nuanced picture is that we believe that most of them, basically these first two, are yearly calculations, and the others are calculations that need a double check but don't need a yearly update per se or inherently. If we look at the adaptation side of the climate change, the picture looks a bit less elaborate as a mitigation, where we can, or we think we can, deduct that the main focus of the ESRS is on mitigation, but nonetheless, on adaptation, you start with calculating your climate adaptation strategy, basically with your actions and resources for adaptation closely linked to your physical risk and opportunity management. And having done that, these calculations for a strategy, you can basically set, again, same logic, set these calculations in your adaptation plan and policy, whether it's a transition plan or an internal policy. And again, next year you start with your strategy calculations and you evaluate these strategies and your plans. That's basically for us the logical flow in these, in the climate change, having two main perspectives: the mitigation, the impact of my business on the climate, and the impact of the climate on my business in the adaptation. If we take another deep dive in three of these building blocks, especially in the mitigation, first one is on the gross greenhouse gas emissions. One of the things that we mostly hear, or the biggest concerns concerning ESRS and carbon accounting, is whether it's again a new standard, it's again finding its own or reinventing the wheel again to do on carbon accounting. But that's luckily not the case. It's basically the ESRS is just referring to the greenhouse gas protocol and all its appendages, or just all its aspects, all its document, or all its guidances, to a must consider. And on the other hand, also quite known standards, the ISO and the European Commission recommendation on carbon accounting, as a may consider. Basically, that means that, yeah, the greenhouse gas protocol is the way forward, or is the major standard here to use in ESRS concerning carbon accounting. We wanted to stress, just to give you takeaway, some minor differences between these ESRS and the greenhouse gas protocol. They start from the greenhouse gas protocol, but nonetheless they took the effort to make some little adjustments, refinements as part of the ESRS. First one is that for your scope 1 emissions, you need to disclose that the ETS coverage. Secondly, but that's mainly a general one that also applies to your carbon accounting, is that you don't only look at your current year and the difference with your base year, but always also to the year before, the comparative. That the greenhouse gas protocol is maybe more stringent on the scope 3 greenhouse gas emissions, and the expectation of ESRS is really only when it's material. It is similar, but it's more stringent formulated in the greenhouse gas protocol. And an odd one maybe is that there's also particular focus in the ESRS on the emissions, the scope 3 emissions of purchased cloud computing and data center services. And so when it's material, you also need to disclose on it separately, which is not the case in the greenhouse gas protocol. A last one that we greatly support is that the greenhouse gas emissions, the total ones, also need to be reported, both for your market and your location-based electricity emissions. And it's not only scope 2, but it's on a total level, which is, I think, a good progress. Another one to focus on, or another one of particular interest for us, is the target setting. And basically, your company, the reporting company, needs to disclose on the climate-related targets it has set. So basically, they need to say whether and if they have set, how they have set the targets, in describing how they have set it and whether that closely links, as also shown in the flow before. It closely links, of course, to your actions and to your transition risk. But one of the key takeaways over here is the target setting process in the ERS greatly follows the SBTI, but not explicitly mentions that you need to follow the SBTI standards and guidances. They greatly follow all the key aspects, all the key principles of the SBTI, whether it's the temperature degree, whether it's the target year perspective, near term, long term, but you still have freedom to basically understate your own methodology, as long as it's science-based and aligned with these general requirements. How would that look like? Just a quick screenshot from our software is that you could calculate your targets considering the SBTI for scope 1 and 2, or scope 3 targets. In this particular case, it's a near-term one, and that you then will be able to compare it with your actions to do that iterative work I was referring to in your climate strategy between actions and targets, which are, of course, very much linked. Another aspect of these carbon strategy calculations is a climate risk. Basically, ESRS or CSRD is asking for the anticipated financial effects. So basically the financial effects of your climate risk, whether it's a transition risk, basically your changing economy, changing policy, or whether it's a physical risk, typically flooding, wind, storm, etc., the physical effects of climate change. And the way they ask it is really like, please classify your assets, please classify your net revenues, considering these physical and transition risk, and also considering opportunities that arise from that transition and from these physical risk from climate change. In that point, the risk point, they really leave much more space or much more room for own methodology. And that's basically, to be very transparent, I think in general, because there isn't yet the standard to do these calculations. We are tackling this at the moment, and we are making good progress of finding the right and the supported methodology. But that's also why I think that the ESRS wasn't able to deliver on that and to refer to basically a general acknowledged standard. So they leave it basically up to the undertaking or up to the consultant and software provider. And again, or to finish it off, the opportunities are here out of scope for Carbon+Delete. Very basic reason is that it's, for us, it doesn't make that much sense to calculate it for the end company, as it's much more business driven, business knowledge driven, market knowledge driven than it's climate risk driven, which is different from the risk side, the cost side. And how would that look like to finish it for the climate risk? Is basically that you end up with a matrix classifying your assets, classifying your revenue streams from a low to high severity, basically the impact if it would happen, and low to high probability, basically the chance of it happening. And then with on the right side with more details on what drives my physical risk, what drives my aggregated transition risk, and energy and carbon cost forecast. That's basically the scope we're tackling this topic. And then my last slide before I give the word to Charles, and that's basically that at the moment we have exports to be an input to the CSRD software like Greenemy, and it's basically a greenhouse gas protocol and an ISO export on the greenhouse gas emissions, a table like this with a split for each scope, for each activity category, and a split for the greenhouse gas emissions, and also an inventory export, basically saying the same as as the overview on the greenhouse gas emissions, but then just basically on the level of the activity. For example, if you have used some aviation turbine fuel, you will get the emission for that activity specifically also with a volume. So with a fuel use that could be used potentially in the other E's, as I was referring earlier. To my last point is that we very much believe that this is not the finish point or the finish line, and that the XBRL taxonomy, which was published by the first version was published by the EFRAG lately and will be implemented shortly, or at least been within foreseen time, will really be a game changer and really enable that connection between different softwares greatly, and will even more support the idea of a specialized back office and partners that focus really on the gathering, the collection of these different calculated numerical values. So that's my last point, and then I'm happy to give the floor to Charles.
Thank you, Stephen. I believe you see my screen, correct?
It's loading. Yes, now we see it.
Yeah.
If you could.
Okay. Oh, switching to full screen. All right. Well, yes. So now I want to give a bit of a perspective on a broader data collection for CSRD outside of E1, starting with showing how you can integrate your carbon data onto a disclosure management tool in order to produce your report, but also to explain how this tool can be used as a product management tool and a way to help you build the narratives. So in this demo that I'll give in a few minutes, I'll be showing this, but before we get into this, I just want to maybe recap a bit on the main challenges around data collection and why you may want to be using a centralized tool in order to collect TSD data. Obviously, the first challenge is the high number of data points that you need to report on, and the fact that these data points, they will be matching your data, which will be localized in very different types of sources. Some will be IT systems, such as your ERP or Carbon+Delete HR systems, but a lot of the data will also still be located in Excels, and some of it will be non-existent, so you will still have to build it. So that's obviously a big challenge, and I'll try to explain a bit how we address this with a tool. Then obviously another challenge is the fact that this data still needs to be harmonized and consolidated. So that's why also having a tool that helps you do this consolidation, have some data governance part to it, is also something quite key. And then I think an always underlying concern is traceability and auditability. So that's going to be always the case to understand where the data comes from, who edited it, who approved it, etc. And that's where also having a centralized repository for your ESG data is a key aspect. And maybe lastly, I think it's important to stress that this first set of ESRSs is just the first set. There will be new sets of ESRSs per sector, but we all foresee a growing number of disclosure requirements. And the idea is that all this work that you're doing now in collecting the data, the aim is not to do this as a one-off exercise, but rather as a more comprehensive exercise where all the data that will be collected in a granular manner enough that you can reuse it for further purposes in the future, whether it's new disclosure requirements or also whether it's to reuse for your own BI. So with this, I will go to the tool. I will first explain how we manage quantitative data, such as the one from Carbon+Delete, how you can easily integrate this into a disclosure management tool before explaining rather giving an example of a narrative statement and explaining how AI can be really a game changer to help you build these narratives. So I'm switching to the Greenemy platform. So I think you now all see my screen. Well, first of all, I do want to stress that CSRD is a project, and as such, it must be dealt with as also a project management tool. And so before I deep dive into these two examples of data, I do want to stress how important it is to be able to manage your CSRD data as a project. So to have a good overview of all the mandatory, so the material data points that you need to report on versus the one that are voluntary, so non-material, where you have a phase-in. Won't show it in this tool, but we do have a preliminary assessment that helps you screen the conclusions of the double materiality in order to do your scoping, and also a gap assessment in order to assign the roles and assess if this data is available or not and qualitative or not. And then you really want to organize your data collection journey into different phases by prioritizing, for example, E1 to start with, and being able, well, in this E1 to first, for example, do your gap assessment there, assign different data to different people, understand if there is a gap or not, set tasks in order to remediate the gap, if any. So I think this is really key to understand that because of the number of people involved in the reporting, the number of teams, it's really important to have an easy-to-use interface where CSRD reporting can be managed as a project. So I wanted to give just a bit of a quick highlights on this importance of managing CSRD as a project. Now, as I mentioned, I'll be giving two examples on how we can deal both with quantitative and qualitative data. The first use case I want to present, as well as simply picking up from where Stephen left. You have your outputs or your carbon data. How can you easily integrate this in the disclosures management tool? So for this, I'll just go to E1 to show a bit where this sits. Well, obviously, E1 is a lot of data, both narratives, but also more the metrics. But if I go to the metrics themselves, and this will be similar to the table that Stephen showed in the slides. We're going to have here all the data points, which are linked to S16, which does include also some of the narratives. But if we take the table itself, I have here all the granularity that is expected by CSRD, the targets, the base year comparative, etc. And the idea is that you can simply upload all this data by using what we call here the ESG data library. So that's a bit the sort of mini data lake that's included in the portal in order to be able to connect to the different sources of your data. So this is going to be an example with e-data, but obviously you could do the same with any structured social data, such as HR data that you probably have some of it, at least for S1, in an already structured way. So here I have all the templates of CSRD, but we're just going to focus here on E16. So maybe just before I pick it up, just want to show you a bit how it looks like, this E16. So this is an example of an import that is taking data from Carbon+Delete, where you have all the year of the data, whether it's currently or a target, whether it's an actual also a target, the trading scheme, the metric, but also all the granularity that you have worked with in your carbon accounting exercise. So whether you have different entities, different units, different sites. CSRD only requires to report at a consolidated manner. However, it is in your interest to keep all of the data with the granularity that you collected them. So this is the file. And so very easily, I'm going to import it here from my files. So, oops, sorry, I was disconnected. Let me just reconnect here. Oh, maybe I can go quicker here. Oh, let me just reconnect here. I'm going to re-import this. And so here, with all this data imported, once I validate, if I go back to my CSRD exercise, I will have a suggestion to accept all this data into S1, sorry, E16 for the eventual final report. So if I go to E16, I can see here, for example, for scope 3, that I have data suggested from my ESG data library, and I can choose to accept it, and then it will be included in my report. And I can also choose to mark it as complete so that I can no longer edit it because I'm really done with E1 and I can focus on the rest of my ESRSs. Now, maybe just another example on another type of data, and I'll take a social disclosure requirements on the own workforce. So S1 is quite a heavy ESRS. Here, as you can see, there's the list of all the disclosure requirements, starting with ESRS 2 that covers already some of the other topical standards. So it's going to be auto-populated to make sure that there's consistency with the different answers. And if we take here S13 on the impact on how to channel the feedback of employees, to put it short, well, first of all, we use AI also to make sure that everything is clear for all the teams that are involved in the reporting. So there's always a digested version. And in order to populate this disclosure, the idea is that you probably already have something in your HR document, in your onboarding files that does cover this topic. So what we offer is to go pick a document that that you've saved. For example, here, and to ask the tool to give an answer based on what is being requested here in the disclosure requirements. So the idea is that it cross-reads the requirement versus what it finds, and it suggests an answer. So that's going to be very helpful to make sure that you base yourself on existing data, to make sure the answers are as consistent as possible, and to have also always the source of the data that's going to be present in your answer. So that's one example on how you can do in order to build your narratives. But also another idea is that if you don't have anything in your existing documentation because it's a topic that you've never explored and you don't really know how your sector does, you can also base yourself on another set of data, which is all the publicly available data. We've scrapped around 1,000 sustainability reports that are publicly available. So typically GRI reports, TCFD, but soon enough, end of the year, 1,000 reports that are going to be made available for the Wave 2 CSRD companies. Here I can ask a question if I don't know anything around this. How do we have typical examples of what maybe bigger, more advanced companies have done there? And you're going to be able to see some typical processes, methods that they use, and a link to the reports so that you can dive into it and get inspiration from yourself. So really, I think it's important to see that all these narratives, if you are a mid-size with low maturity on this, you don't have to start from scratch. You do have some documents that you can reuse to make sure there's consistency, and you can get inspiration from external sources as well. So this is what I wanted to show, to give two concrete examples of integration with carbon data. a more narrative use case and how AI can help. So with this, I'm going to give back the word, or maybe just, I see I have the last slide. Just to put it very quick, what we recommend in terms of method when companies implement CSRD or the data collection CSRD is to work on an iterative way of working, starting typically with available and mature data that you know is material, such as U1 and S1, so with different sprints, to then leave the less mature data and less priority data. And we recommend this way of integration, which is semi-automated, so using these import templates. It's very pragmatic, very light in terms of cost. You don't have to kick off a full IT integration. And nevertheless, it allows a lot of consistency in your data. And then for the second year, you may consider a more automated way of integrating the data, but I will not cover this today. But that's also something that is possible by using a tool. With this, I'll give back the words to Carbon+Alt+Delete.
Thanks a lot, Charles, for the very interesting overview and a quick demo. That leaves us another 10 minutes for basically questions and answers. There were some questions already in the chat where I think Steven, you answered already some more on the scenario modeling. I see a hands up of Jewel. Jewel, you cannot unmute yourself in this webinar setting, so please put your question in the chat. Maybe two questions for you, Charles. I also saw some thumbs up during the AI demo. There's a question on different languages for the text interpretation of the AI part. So basically, does it work for different languages, or what are the limitations there?
So for now, the tool only produces the answer in the language that it found. So there's no sort of automated translation. But if you upload a document in another language, it will give you the answer in that language.
And then there's another more open-ended question from Sophie and one of Amato linked to it. Basically, the one of Sophie is that, is it possible some way to have one sustainability report covering all requirements? So requirements covering from CSRD, taxonomy, and also the CSRD. I'm not exactly sure what's the use case to have it all together. I know you guys at Greenemy are more experts in the different European regulations. So how do those three reports compare? Does it make sense to put them together or not? If you can say a couple of words on that would be helpful.
So first of all, from a tooling perspective, I didn't have time to show it, but of course the EU taxonomy is also available as another module. But the idea is that indeed it's possible to have all the data in the same place. And as you may know, the EU taxonomy KPIs are supposed to be in the CSRD report. That's something that you can do with the tool. CSRD, well, it's still a bit early. I think we also look into this, but I think it's still early to understand how the tooling will include these new requirements. But I agree indeed that the vision is that as you saw, there's one easy data library, and it can be matched to different frameworks, EU taxonomies, CSRD, CSDD in the future, but also GRI, ISSB.
Right. Thank you, Charles. That's helpful. Maybe a question for you, Steven, on the Carbon+Delete side more is on the integration or compatibility with other carbon accounting tools, such as mentioning Eco-Transit, which we know. So Steven, on compatibility between Carbon+Delete and Eco-Transit, or how the two link, can you say a couple of words on that?
Yeah, very much. So basically, Eco-Transit, the way I know it, is a tool that calculates the carbon emissions of mainly transport-related activities. And so we have been in conversation also with Eco-Transit to see how it matches. And basically, the compatibility is that we both follow the greenhouse gas protocol, that we both see or look for the most appropriate data set, and that we do basically the same, but in a different focus. Where Ecotransit really focus on transport, for us it's the focus on really carbon footprinting, where transport is one of the aspects, but they are perfectly compatible because they basically have the same focus and the same standards they follow.
Didn't I see a follow-up question from Sarah in terms of data imports, right? And please add on me, Steven, if I'm not complete. But how we also in Carbon+Delete work, we also have a very flexible Excel import sheet.
Yep.
Because that's still, I think, the maturity level where we're at, that a lot of data is still flowing between platforms, between departments in an Excel format. So any calculations done in Ecotransit, I'm not 100% sure, but I assume they can be exported there as in an Excel format as well, and then can be imported and mapped to our data model. Technically, we can do way more. We have an API design as well. However, we see in practice that the use cases of such an API integration are still rather limited.
Exactly. Fully agree. Basically, so you have three options. You can import your emissions, your calculated emissions from Ecotransit. You can import it, or you could import it with API, but same remark I have, or you could import your distance from Ecotransit and import it and calculate it in Carbon+Delete to get your calculated emissions in there. So there are basically three ways of compatibility or data linkage.
And then maybe also in the interest of time, maybe a final question in the meantime. I see, Charles, that you're also responding to questions in the chat. Is maybe the question from Carla, are there templates available to start collecting data for CSRD, right? So where should they start in terms of data collection? Any advice on this question from you, Charles?
Yeah, I'm not sure I fully grasp the question. I think that the templates of how CSRD is structured. Well, this is included in a data collection tool such as Greenemy. If you mention a template, rather an example report that has been published somewhere and that sort of gives the best practices. As I mentioned, you can find some example reports by asking questions in our AI tool. There's also some other interesting, let's say, AI-focused consultancies that do the job of screening some individual reports that they've seen from some big listed companies and doing a bit of a more personalized analysis on how it matches the FRX requirements. So I listed one name in the chat. Feel free to check this. That can be interesting reports as inspiration. But also, just to clarify, if by templates also you mean all the data model of CSRD in our tool, it's available. The quantitative data points are available for export. All the import templates, you can have access to them so that you can see all the KPIs that are requested, at least for the quantitative ones, by CSRD. So that's something you can also extract from the tool.
And maybe to add on the FRAG Excel file, which was shared in one of the comments, it's a good starting point, I think, to just get a notion of what is demanded and in what format. And at the same time, it's probably it leaves too much detail open and too much interpretation open. So it's just a starting point to get a quick overview of what is there, but it's not sufficient to really know what is needed at that point or in that place. So then you need probably indeed to get an introduction via the Greenemy tool, or to do a calculation of specific ones via Carbon+Delete, where you know you're compliant with the way it's demanded. So that's, I think, always with the logical flow, to avoid also double work, because the FRAG Excel is not really, like, in that sense, the best starting point, I think.
Thank you, Steven. Thank you, Charles. Let's stop the Q&A here, also in the interest of time. For other questions, follow-up discussions with Carbon+Delete, with Greenemy, I've just put in the chat a link to the agendas. Maybe 2 final reflections, right? Just to be very clear, there is no exclusive link collaboration between Carbon+Delete and Greenemy, right? As said in the beginning, we strongly believe in dedicated tooling and to make it scale and to really help as much as companies as possibly. We don't believe in exclusivity, right? So as discussed, data can flow from Carbon+Delete to Greenemy, but there are other solutions as well, maybe already working with solutions. So this is more a general overview, and I also want to be very transparent on how we work with Greenemy. Then to wrap it up and be respectful of your time, we'll stop here. I'll just take the opportunity to make a short advertisement for our next webinar, which will be again very much focused on carbon accounting and on everything that has to do with FLAG and LSRG, right? So the FLAG standard from Science Based Target and the land sector removal guidance from the Greenhouse Gas Protocol. Again, some abbreviations to the alphabet soup in the sustainability world. But we will do a deep dive on this topic in the next webinar in September. So feel free to quickly scan the code. We will also put the link in the chat. And then the final slide is again making you aware of the carbon community that we have, and actually it's broader than community. There's also something on the European regulation. So this has nothing to do with the Carbon+Delete platform, has nothing to do with Greenemy, but it's just an open forum where like-minded people, basically everyone here in the call working on sustainability, can put questions, answer questions, see previous answers, just to help each other out. We know that the question desk or the support line from the Greenhouse Gas Protocol, from EFRAG, they don't really answer. It's a bit overloaded. So it's the kind of a self-help community that we invite you to join and help each other.
Maybe small note, it's at the moment we have 150 members already, and we really see it kicking off and getting complete and quick answers from peers. So that's really nice to notice.
Yes, absolutely. It's really having good traction. So with that, I see we're at the clock of 12. So thanks a lot for joining. Thanks a lot for your questions in the chat. I hope you've learned something and take something away from this webinar. We'll share the slides, we'll share the recordings afterwards. Enjoy the rest of your day and hope to see you in one of the following webinars. Thanks a lot.
Thanks a lot.